Very, very good morning, everyone. Charles here. Fairground daily chart analysis. Thursday, the 28th of May, just approaching 6:30 local time here in Milan. Good morning to you all. I haven't marked my charts up just yet, to be honest. And if I am honest, it's probably going to be a nil trading day for myself personally. I'll explain the reasons why. Pretty much the forecast and the bias has reached its expectation based on the daily time frame in particular. I gave myself a couple of opportunities to understand whether or not I am correct or whether or not I could be incorrect, and that was based on the range. So if the market was no longer in a range, would I be willing to take a position based on the 4 hour time frame, as opposing to not actually waiting for the technicals of a range to be established, i.e. we'll have the breakout, then potentially break back in, then we'll see price action starting to develop, and then at that stage we'll be looking to trade the range to the upside. So there was that element of, if I can call it, fear to begin with that DXY, to understand whether my cross pairs were ready. And then with that said, the second element of my thought process was to then understand, well, if I am incorrect and price is not in a range, and actually as the start of the week developed, we had that bullish push bullish push within the range, allowing us to manipulate a 4 hour order block, which then in turn started to develop and in line with the 4 hour 50 MA, which I'll begin to amend, but you can still see the line there. And then, of course, once all of that information is superimposed on the lower time frame, we're looking to refine those areas down. So, of course, we've got the session lows. We can understand the dynamics of the range just here. And what I meant by that is, before looking to take a range position, for me personally, I am looking to see that those session lows are taken out of the market, potentially the gap to be filled. There was a lot of element to understand whether or not we are ready on the DXY to make that long move. However, what I've been stressing throughout the week is the better news on the DXY is the fact that this week we didn't open up at these highs by that weekly 50 MA. Therefore, we had room towards the upside. One of my breakdowns were particularly named that in the title, that the DXY has room to the upside. Understand the DXY. It's a very important principle, particularly in the environment that we're trading in at the moment, and that will bring me on to my second point in a moment. So, as you can see, I mentioned, when was this? Just yesterday, to be honest, that we had room towards that upside, and to be honest, I'll be looking to trade that up to that weekly 50 MA and understand that, okay, of course, we can get up towards that weekly 50 MA. Price could well get up to these highs of the range, but it's more than likely not going to be me taking full benefit of the fact that the DXY has gone up to this area, because I would be expecting a rejection from that weekly 50 MA, despite now being higher time frame bullish on the DXY. The reason for that, if I go back to my chart for a moment, is quite an inconclusive previous weekly candle close. Technically, yes, we have closed above that weekly 50 MA, meaning that actually this current weekly candle has every opportunity to potentially push slightly higher and now start rejecting that weekly 50 MA to the upside. But because it's not a solid candle in either or direction, that in essence will provide the conflict and confusion moving forward. So therefore, getting to the charts this morning, I can now understand that in terms of my bias, the bias has been reached. Therefore, there's very little for me to be able to trade in terms of my standard pairs, because using the DXY to my advantage, the advantage was trading it towards that weekly 50 MA. And as you can see, we are there and we're already past it. So depending on how my other cross pairs look to develop, it could be a day, or actually it could be the month wrapped up, to be honest. I haven't marked charts just yet. It was just a little thought in the morning as I was about to start my day in front of the charts, to understand, well, is there much point I mean, the better news is that I will still continue to mark my charts, but it's very, very, very unlikely that I'll be looking to speculate. It's sort of quitting whilst you're ahead type of mentality. We've had a very good week, probably one of the better weeks, being quite honest. And if we go to EU from yesterday, a bit of a shame with EU. Aside from EU was one of my favorites to trade based on the fact that we had closed below that 4-hour 50 EMA. We were respecting that 4-hour order block. Price developed in the 15-minute time frame. We came into the area, and to be honest, it's a bit of a shame that we was taken out of that break even, but nevertheless, it was that liquidity within the news that actually drove price to my better area on was it 1:30? Yeah, it drove price to my better area to take that sell limit. I remember posting in the chat, in the Fergrant chat yesterday, that it's a bit unfortunate that my sell limit is still yet to trigger. So as we broke this area, I figured, well, actually, maybe price could just continue melting towards the downside. So that news came out, drove price back up to those highs, as we can see there, where the DXY just melted back to the downside to an area that we could fully understand, where price would look to gravitate towards, back to GU then. And price was just taken right up to that area into the 4-hour 50 EMA. And then we just continued rolling to the downside. I remember creating a bit of a video last night, just a bit of a summary roundup where price was in and around these areas. And I said I'll either just leave it, close it out, or let it take full take profit. So that's that for the day, to be honest. Today we've taken full profits there. That's 4%, roughly banked on GU. EU again, as I say, a bit of a shame, but it needed to happen for my limit to be taken there on GU. And on the flip side, just a bit of added information that, as I said, we're trading in some tricky circumstances. I can't say that enough. And if you're not really, I mean, certainly as a new trader coming to the market, these are certainly different circumstances to when I first started. When I first started trading, pretty much everything I did turn to gold in terms of my strategy. The strategy is still very, very, very effective, but it's just when to start applying it, how to apply it, and of course now bringing the DXY into the mix just gives you that added confidence that, okay, I believe we're ready to start executing positions. So one of those teams where I will say keep your head firmly in the game, understand that these are challenging circumstances, particularly if you are a new trader, but still allow me to give you that good example that percentages are still very much so available in the market. You just need to trade with your confluence. That will allow you to trade with confidence, of course. Manage your risk accordingly. That in itself will allow you to trade with confidence. If you're finding that you're not confident trading, then perhaps you're simply risking too much per trade. Trading shouldn't be a stressful type of operation. We're not brain surgeons. We're not doing anything that requires life or death decisions. It's not a stressful game. It's just when to execute and how to manage those emotions. And the best way to manage your emotions, in my opinion, something that I teach, is knowing how to manage your risk and being comfortable with losing that managed risk, being comfortable with taking risks in the market that we trade. We are professional risk managers, in my opinion. So it's our job to take risks. It's just how we manage those risks. And as I say, if you're finding it difficult to manage those risks, take some percentage off the table, reduce the risk that's available. So I'll keep it there for you, team. I'll get to marking my charts now. As I said, it's very, very, very unlikely I'll be trading today, if not for the rest of the month. I think that's a pretty good month, almost, if not, I think, potentially into double digits. I have to double check that later. But yeah, a fruitful month, and just quitting whilst I'm ahead, particularly because price is now to the target that I foresaw it would get to. And then with that said, really, I would now be expecting price to start looking to reject some of these highs. But just because that is the forecast, it doesn't mean I need to trade that forecast, because actually my internal thought process is that although we're approaching these higher time frame order blocks, we're fine, we have a daily order block within this area. This gap is now filled as well, which has taken an awful long time to rebalance the market. I'm not convinced that the DXY personally, so forget technicals for a moment, this is more fundamentals and personal thought process. I'm not really convinced that DXY has any reason to start slowing down. So when I'm starting to mix fundamentals and my personal thought processes into technical analysis, that's a bit of not so much a dangerous game, but I rely heavily on technicals. So when I see that my personal thought process is starting to get involved in that, that's when maybe I need to step away for a moment. And that's really because price is at an area where I would ultimately be looking to short the DXY now. But does that necessarily mean that my cross pairs are ready for a long position? Not quite yet. So refine this daily order block down to the lows. We have this 4-hour order block here on EU. So definitely I'll be looking to see if when we get to these areas on EU, whether or not the DXY should then be right up at those highs within that daily order block, perhaps even up at these highs towards this 4-hour order block up here on the DXY, then it might be something for me to start reconsidering my thought process, whether or not I'd be looking to trade in the opposite direction on the cross pairs. While we're here to take a look at GU to see if GU matches similarly. So we've broken that key structure point, so we're very much so bearish in the market again, expecting, to be honest, after this low created in the market, we've trickled our way back up to that lower high position. And I believe this is now going to roll all the way back down to that lower low, or potentially just into that weekly 50 MA before a slight rejection back towards the upside. So again, just like on EU, I am expecting fully for price to get to here before we can start looking for the inverse position back up to those highs. But as we can see, previous weekly candle closed bullish above that weekly 50 MA. So in fact, certainly if price gets to these lows, then I will be looking for a long position to the upside. But in terms of today, it doesn't look like that would be a position that I'll be taking on GU. We'll just have to see how the cookie crumbles throughout the day. Well, team, thank you very much for your time, your patience, your support across all the channels. As always, I appreciate it. If you're struggling, definitely hang in there. Find some comfort from what I'm saying. Yes, I've been in the market for over a decade, but even from time to time, I'll be the first to admit that these have been very testing environments for trading. And as I say, get to the charts early most mornings, have a bit of a reflection to understand, well, this is quite a strange game, just looking at candles at 4:30 and 5:30 sometimes in the morning. But then you have to understand, well, actually, it's probably one of the easiest games out there to do. It's just all about mastering yourself. As I've mentioned before, managing your risk, and learn really how to manage taking risks. And I'll keep it there, team. All the very best. I better get to marking my charts for the day, and we'll see how the day rolls on. Do take care, everyone. Ciao.